What's up, everybody? So I got texted video, and it sounds like a personal attack. It's a Tesla's going to zero. So we're gonna watch this together. A buddy of mine texted me. He said, "Hey, you should do a live reaction to this, and give me your thoughts on this." So I'm interested to see. It is from Zip Trader, Charlie. I gotta say, looking at his thumbnails, I'm like 50-50. This is probably just clickbait and probably, I don't want to say crap, but if it's clickbait, I automatically call it crap. YouTubers just lying to everybody. It's super annoying, especially like the big ones. There's always like a shocked face, and then the title, and then like whatever's in the video is gonna be the exact opposite, or they're gonna say like, well, somebody else said it was gonna go to zero, but I'm gonna continue to dollar cost average. It's like it's the same thing over and over again. But it's interesting enough that this has been. It even got posted in my main chat. Someone said this is a personal attack on Don. So just feel it anymore. We're going to switch to rant cam because the current remodel is done. So we're going to, I do want to hopefully take some notes. What I hope to provide is like, hopefully it's not clickbait and it's not just some random crap video. My buddies don't usually text me crap videos because they know I'll just make fun of them and call them stupid. And then hopefully I don't agree with everything because I certainly don't think Tesla, it's not that Tesla's not in the hot seat. I don't think Tesla's going to zero. But is there some margin for some downsides? As much as I hate to admit that. So hopefully I'm not just another internet opinion. I got some either constructive criticism, some pushback. That'd be cool. But more importantly, Charlie has no idea who I am. He's not buying or selling Tesla off of me, and I actually couldn't care less what Charlie has to say. I respect everyone's opinion and what they have to say, but when it comes to my clicking the buy and sell button, it's all me, 100%. I don't care who's drilling what opinion, and that's something you should do. I actually had somebody comment on a video the other day. It's a video I made it's 10, 11 months old, a year ago, talking about selling Apple at 175. The first time it got there, I said, hey, tech could be in a bubble, could be here's the peak. What do you know what happened? The guy commented saying like, oh, I think tech's in a bubble now after it's already dropped 30%. If that's your level of attention, if that's your attention span and you couldn't even pay attention to the screen, then you certainly should not be buying or selling off of just like a YouTube video you saw. Like your IQ should probably never rival the thermostat, and you probably should pay attention if this is your real money going in and out of this. So anyway, disclaimers all over with. Let's switch to the rant cam. It's back. The remodel's done. So let's rock and roll. So this is the video. He looks upset. You okay? Oh, it's this camera. Charlie, you okay? Charlie, on a serious note, are you okay? Like, it seems like it is just crash, sell everything, get out now, the world's on fire. I wonder what would you do if you took a week off? Right? I've seen a whole bunch of YouTubers just deteriorate when they get big. So congrats on the growth, by the way. 607,000 subscribers. I definitely subscribed to Charlie a long time ago, before he even hit the 100,000 mark. So I am pumped about that growth. Anyway, let's do this.
Substantially more as we get into 2023. And in this video, I am going to present my 4 direct and to the point arguments for why I believe this is going to occur. And at the end of this video, I will give you my thought process on how you can use this to your advantage. Timestamps down below. Let's get right to work. Number 1, demand. I do not believe that Tesla's demand can withstand the massive macroeconomic crisis that we are rapidly heading into. I do not believe that Tesla will be unaffected or will not be greatly affected by a lot of the massive economic problems that are going to be hitting literally every other company. Tesla and Tesla shareholders are used to enjoying a dynamic where there is simply always more demand than there is supply. The question is, can Tesla produce enough? Not, can Tesla sell enough? But I firmly believe that this is rapidly going to flip. Make no mistake, right now the Tesla business is about as strong as it's ever been. It's hit record after record, near perfect execution the last few years and really the last 5 years. But I believe this this last year, 2022, is going to be the last boom year for Tesla, at least until the end of the crisis. Since the summer, you've seen a rapid and consistent decline in the backlog of orders as a result of them solving their supply chain issues, improving the process and time to production, and being able to better handle demand at the same time where demand is cooling off in certain markets. But I don't think that you're going to see these backlogs replenished anytime soon. Why? Because demand across the industry and eligible buyers is going to drop like a rock. Interest rates on auto loans are skyrocketing right now and set to go much higher, which means less people that can afford the payments on luxury cars like the Teslas. Personal savings that were extremely elevated and pumped during the pandemic are now in the opposite situation at lows we haven't seen in 10 years, despite the dollars being worth less than they were just 10 years ago due to inflation, which means the amount of capital on the sidelines to be able to buy or put a down payment down on cars is dropping and eroding fast. The unemployment rate right now is at 3.5%. This is likely as good as you'll see it for the next 3, 4, 5 years. The Fed is doing everything in their power to make sure that this economy cools down and cools down off a damn cliff, so that we can get this inflation down. The Fed is on a pathway of we need to get prices stabilized. We don't care how many people lose their jobs. In the most recent earnings call, Musk said that a global recession could last until the spring of 2024. He stated that China is in a recession of sorts driven by the real estate market, while Europe is in a recession of sorts driven by the energy market. Overall, what you're going to have in 2023 and 2024 is less people working, less jobs, less savings, continued high commodity prices, and overall just a massively blunted global economy, which means less people able to buy Teslas in the first place. It doesn't matter how much you like a Tesla. If you can't afford it, you're not part of the eligible market for Tesla to sell a car to. A big argument for why Tesla will never have a demand problem is, oh, well, there's always going to be people that love Teslas. That's true. But at the same time, there's not always going to be people that can afford them, not in this current crisis that we are entering into. And I'm not saying that Teslas aren't competitive. I'm not saying people won't want to own Teslas, and I am no Tesla hater. In fact, it's quite the opposite. But I believe the number of people that are able to afford to get a new car at all is going to drop substantially in the coming quarters and years, let alone a luxury car and let alone a luxury EV. We are heading into a different world, and the car boom of 2021 is over. Tesla will likely continue gaining overall market share, but of a market that is going to be dwindling for at least the next year or two because people's savings have all been eroded, interest rates are going up, people aren't going to have enough money to buy the bare minimum, let alone an EV. Number 2, China. Now, a lot of investors have a lot of faith in the Chinese market to provide Tesla with insane growth and sustainable growth. And yes, it has indeed been a huge goldmine for Tesla, something that we've talked about for years. Up to half of their profitability comes from China sales. China is the largest EV market in the world and thus a very, very crucial segment. However, I simply do not believe that the CCP's current policy trajectory is very supportive of consistent economic progress, especially heading into a more global crisis. In fact, it's quite frankly the opposite. Based on what they said at their latest party conference, their goal in the coming years isn't economic progress. It isn't being more open to outside businesses. No, it's more about being sustainable, self-sufficient, which means favoring their own companies within their own country. I believe they're going to do everything in their power to favor their own companies. I believe they're going to have less money in their overall economy to buy luxury vehicles. And I believe that a lot of wealth destruction is going to happen in China in the coming years, specifically because of the new policy trajectory they are embarking on and really have been. You're going to continue to see a lot of the terrible economic policies coming out of China that we've seen in 2021 and in 2022 get worse in 2023 and 2024. And I believe that the CCP is going to drive down profitability for Tesla in that market. As the Chinese economy suffers, I do not expect luxury vehicles to perform well. Aside from that, there is significant geopolitical risk if China does decide to do certain invasions. Number 3, valuation. So Tesla's valuation, even discounted from all-time highs last year, is still heavily based on a decade plus of record low interest rates, overall conducive monetary policy, and the results that Tesla and Tesla stock achieved with those two things working in their favor. You can acknowledge that Tesla is a winning horse and at the same time acknowledge that if you starve the winning horse, well, it's probably not going to be able to win many races anymore. A lot of people will disagree with this, and that's fine, but I believe that when you starve a winning horse, the horse will perform worse, not better. The Fed is starving the entire financial system, and Tesla will be starved as well. not only will your average family not be able to afford the purchase of a new car, but the amount of future that investors will be willing or able even to price in is going to be even worse and will drop even more. Number 4, the chart history. So Tesla right now is down about 50% or so from highs, and it's easy to look at this and be like, oh, 50%, it can't drop more than that. No, no, no. But look at the last time the Fed tried to raise rates on the economy. The last rate hike cycle, a mini rate hike cycle, saw Tesla stock dropping from $25 to $11.66, along with the overall market. Yes, Tesla wasn't as strong at that time. Yes, they were in a different stage of development, but keep in mind, folks, that the market and the tech plays that the Tesla of today most closely resembles were also decimated just because the Fed wanted to do some pansy rate hikes, which then they pivoted on. If the Fed didn't pivot, stocks would have continued going straight down. Right now, the Fed is signaling loud and clear, we will destroy every ounce of wealth in this economy that we can, as long as inflation can come down a little bit. The Fed is dealing with inflation that we have not seen in 4 decades and is attempting to destroy the stock market at a pace that we haven't seen in 4 decades. And Tesla is not immune to that. So in conclusion, it is my opinion that if you say you are bullish on Tesla over the next couple of years, what you are really saying is that you are bullish on the overall global economy in the next couple of years and its ability to generate more liquidity, not less, which means that you're putting yourself at war with the Fed. You are making a projection that 4-decade high inflation, the coming 4-decade high interest rate increases, the global crises, the different war fronts, you are making a bet that all of those things coming together are creating an environment where more people are going to buy luxury EVs and not less, and where people are going to pay more multiples for luxury EV companies and not less. I personally believe that Tesla makes a great product. I believe they have a lot of other products they're going to be able to introduce into the market in the next 5, 10, 15 years. I think their leadership is fantastic, and I'm not just talking about the Musk-Meister, but I do not believe that the economy of the next few years will really be able to support at all these valuations. But on the bright side, I do believe that after this crisis, Tesla will come back. I believe that demand will come back. I believe the EV market, while it might contract a bit in the next year or two as the overall vehicle market contracts, I believe that in the next 10 to 15 years, it will expand again. So with Tesla, you could say that I'm a short-term to medium-term bear and a long-term bull. And if you feel the same way, how can you use that to your benefit? Well, one way is to acknowledge the likelihood of Tesla stock going down much further and setting aside a specific amount of cash capital to buy at significant low points. For example, I'd almost guarantee you that we will break below those early January 2021 support levels in the 170s. At that point, there was a ton more liquidity in the system, and Tesla was barely able to retain those levels even at that time. I mean, after all, the current trajectory downward has already been this aggressive, despite Tesla's numbers still being very solid and the Fed only starting with their rate hikes. Imagine what this trend will look like when Tesla starts reporting bombs in their earnings reports. Imagine what it's going to be like in Q1, Q2, especially Q3 of 2023. So yes, I think that we'll go even lower than those January 2021 levels. Now, I know there's a popular saying that says time in the market beats timing the market. And a lot of people use this to excuse buying stocks at any valuation. The valuation doesn't matter. All that matters is that you're in the stock for as long as possible. That methodology actually is mainly meant for buying something like a broad index like an S&P 500, because the idea is if you can't time the market and you can't pick good stocks, just buy the overall market, and it tends to do good over the long run. And if the overall market can't perform, you're screwed anyways, right? The problem is that when you apply it to individual stocks, you have to first find a winner, and then you have to hold it for extreme amounts of time if you get a bad valuation. Tesla, again, I think it's a winner in the long term, but people that buy at 414 at highs are going to get significantly lower returns than people who are buying today, even at today's prices at 223. And I think the stock's going to go down a lot further than 223. So the point is set some capital aside, and when you get to significant new lows, that's when you want to add in the most aggressively. Anyways, that caps off today's video. Make sure to hit that ravishing like button and subscribe. Get your up to 15 free stocks with Moo if you want to join.
So we know it's Moo. Anyway, go find the video, subscribe to Moo. Get your 1,000,000 free shares, as all of them. Which one do we want to do? Let's get it back to, let's switch it back to virtual. All right, so we got some key points. Let's bring that. Oh, okay, so first of all, Charlie, it's not 0. You said down. Got to pick one. Am I like two guys in you guys' face? I feel like I'm giant over here. All right, so demand crush. Yeah, I see. there's not there's some pushback on this one. There's a couple points. The third point I'm not going to argue. So we got demand crush, we got China valuation, and then look at the charts, which that's what I do every day. All right, so will Tesla see the demand crush? That's where I push back. Tesla they never got into the driver's seat of the middle class or the lower class. You know, God, and I don't want to like blanket statement this, but you kind of had to have money to buy Tesla anyway. They weren't cheap. They were, you know, if you look at the Rivians and you got a $130,000 truck versus, you know, if the Cybertruck ever comes out, $70,000. You know, like they're supposed to be the affordable EVs. Tech-wise, I think they're the best, but still, you didn't have a lot of people looking at a 2009 Acadia family car versus a should I just get a new Tesla? So one advantage I think they have is they didn't see these the legacy automotive manufacturers, right? They got the bread and butter cars. Like Chevy used to have the I don't know what they have now, but the Cobalt was like, hey, if your credit wasn't that good, you know, like there was entry level cars. Tesla never had that, so they're not. I don't think they're gonna see the crush that a lot of people are talking about, because it's basically like the rich buy Tesla. So I don't think it's enough to even see the demand crush. They never really got there. As far as the backlog cooling off, the demand got so much that it was over a year for a Tesla. And why even put in your order? If it's going to wait a year, I'll just do it later, or I'll buy another car. That became unattractive for a lot of people. So that naturally, I think, just pulled back in the normal case of supply and demand. You know, like, why? Like, who's that excited? Like, maybe us in the YouTube world, people that really know about it, we're hyped about it. We know what Teslas are. We're going for it. Put my order in. You know, the best time to put that order in is now, or yesterday, or, you know, a year ago. But today's the next best thing. So I bet a lot of people did cool off just because of that, because now there are competitors. The cool thing about competitors getting into there is people start looking it up, like, hey, should I get an EV? And then they're like, well, crap, Tesla's the best. So the best thing the competitors ever had going for them was a 12-month wait time on Tesla. Like, well, I'm gonna get the Ford Lightning a little bit sooner. Maybe I will just go back to my original one. Can't be that much worse than a Tesla. So that's, I don't know if they're gonna see. Man, I don't want to just backtrack this, walk it back. The auto industry next year, I think it's gonna just get bent. There's no two ways about it. There's gonna be so much. There's gonna be quite a bit less. There's gonna be a lot less buyers, I think. One, qualifications are getting stricter. People are just going to be saving. There's going to be layoffs. There's going to be fear of it. I think stocks hit the recession this year. People are going to feel the recession next year. Not a lot of hype to just be out there just buying a bunch of new cars. Not to mention, you take that. Now, there's your demand pulling back. And then you add in the fact that we finally made a chip or two because things started to slow down. Inventory just gets rushed like a tidal wave. The cool thing about that is Tesla doesn't have lots with 40,000 F-150s sitting in it. Yeah, they don't have that. They were fortunate enough to be new in the time of this. Like, it had Tesla ramped up production, just kept rolling, and then they saw a demand crush. Then I would probably agree. But they never, like, if there was a $30,000 model that was out, that's gonna be the one that gets screwed. But the people that are buying Tesla are typically people that don't feel the recessions. It's not as much as it's not really fair to say. A recession just hits those people differently. Okay, so number 2, China. China will favor their own, but that's also important to remember that Tesla has a factory in China. Like, it almost is China. The way they run their business is for China. So kind of the you know, the weird stepchild. Because I fully believe that if it comes down to we got these parts, and who's first, Neo or Tesla, you know, or not Bind, is it Bind? Who's the other one over there? I think they're gonna get it, but I think they're so small that if there's 100 batteries, Neo goes first. Neo's going to take the top chip, right? Maybe even 50, but the bottom 50 still go to Tesla. They're so small that they're probably not. They couldn't get in the way because I got to be honest. Let me just at least put this out there. I'm not out there deep diving into these companies, so maybe their production is just, and I'm just wildly off on the production part. I don't think they're producing that much. So even if they do take first place, you know, it's like letting a mouse eat a crouton off your salad, you know, and you're going to get the rest. Well, let's see. Yeah, so can the smaller ones really hang with Tesla anyway? Like, yeah, they're number one. Big deal. All right, so number 3 was valuation. And, man, Tesla does have a pretty rich valuation. I can agree with that. It's why, like, I love Tesla. Definitely, I don't want to say I'm a fanboy. I don't know why I don't like that. But it'd be hard to argue that. Also, why I don't like to hype Tesla that much. Just for that very reason. Tesla comes with some risk, for sure. As far as the valuation goes, how are you building your valuation? What are your metrics you're using? Are you valuing it as an auto manufacturer? I get that's where they make. Everyone's always like, well, they make 90% of their profit. Thanks, I get it. I happen to know a little bit about Tesla, but this is going to tie into the next one, like time frame wise. What are you doing time frame wise? Because valuation. This is. I even talked to a fund manager, and now he manages billions. Like, well, last I checked, 14 billion. And even he said, like, it's hard to buy stuff like this because can you buy hopes and dreams? Like, Tesla hasn't produced that. Like, we're talking about what it's going to do in the future, and they're talking about what can we prove right now? What the track record's cool. It's got a nice, cool ramp, but the numbers are still breadcrumbs. So, you know, it's kind of hard to go off of that. So I think the retail crew, we pay a higher valuation for things, or we accept a higher valuation. And Tesla has a very huge retail base, largely because of its biggest pro and con, Tesla. So what are you valuing it off an auto manufacturer, or are you valuing it off Elon? Because that can match a couple things. Because while I do think the auto industry is going to get wrecked, when things get rough, that's when innovation happens. And if there's one person I want behind a problem that innovation can fix, it's definitely Elon. And it has a whole lot. So he brought up like he brought this up during charting is. Oh, you know, last time 2018 during rate hikes, we saw it go from 25 to 11. We can pull up the charts. You know, but like Tesla has a much bigger web now, you know, and with Elon and in solving things, what's going to happen when he starts seeing these problems? He's going to jump on it. And at that point, does solar see another run? Like, you're going to see Tesla has this web spun out over the market. And I definitely don't want to try to sell you guys on Tesla because I think I agree with this one. It's just, how are you valuing it? Where's your and what's your allocation towards it? Are you Steve and Mark Ryan with your 100% of your account in there? Because that's looking rough. I would understand probably options if I were you. You call it gambling, call it whatever you want. I time things a lot, and I would definitely want to hedge my portfolio. So I don't know. Yeah, I guess, what are your metrics for your valuation? And is it Elon you're valuing or the auto industry? Because that's where the conflict and argument, I think, is. Let's get up some charts real quick. Let's switch to a little YouTube rant. Futures did just open up, so we're seeing jump to the magic yellow box, rejected, weird coincidence. Who knows? We're gonna go over that here in a little bit. All right, so let's Tesla. So he's talking about the chart history. Ignore all the boxes if you're brand new to this channel. I wish I could explain that in one day. 2018, we saw it dip, get wrecked. All right, 2019 was, okay, there's the 25, drop that thing down to 11. Might I go ahead and double down on this, Charlie? That's not zero. It's a little over half, so it's a bit concerning. Where would half put us? God, would suck. We start from up here. What was that? 411. So that puts us right down to the 200 mark. Oh, that's not a good conversation. I mean, if we were to match those metrics, hey, we hit it. We're good. We're done. Speaking of chart history, guys, charts. I do it all the time. And before let's talk about this: timing the market versus time in the market. Charlie spelled that thing out perfectly. That's for indexes. That's for people who don't want to time it. That whole 95% of the people fail. That's because that 95% come in, they try it one time, they lose their money, they chalk it up to gambling or luck, market manipulation. They roll out and they never do it again. Happens all the time, and that whole bunch is there. I would argue if you said, hey, what's the metric on how many people fail that come in and put in the work, that actually try it, and they made it past their first 2 years. What's the metric there? How many of them fail? That being said, that is for indexes, because if you look at just picking the winning stock, I've gone over this before. There's been over 100,000. There's 97,000 tickers that have come and gone. They've all heard stocks only go up, time in versus timing, and they're gone. So there's a little over 7,000 tickers on the market right now that are all hearing the same thing, and in a few years, that'll all be different. It'll be a different one, and it won't be 97,000 anymore. It'll probably be more like 98, 99,000. So yeah, you got to pick a good stock first. Luckily, I think the stock we're talking about is going to make it. All right, it's Tesla. It's a big one. So anyway, I agree with him on there. Let's just shut down that timing versus time in. And right now, what's the current trend might have changed. We might be in a bear market rally, but look at this. Let's just keep it simple, guys. Your time frame needs to match your trade, right? He said short term to medium term, he's bearish. What about this chart says you shouldn't be? Count them out. There's 1, 2, 3, 4, 5, 6 candles. You need 2 hands for this, right? You could have even got a bad day on the 4th of July, lost a couple, and you could still count this out. Out of those 6 candles, 4 of them are red. There's more red candles than green. What does that mean? It's going down. Okay? There it is. Until that metric changes, until we turn things around, which, go into the smaller time frames where you start to see this, it just starts to get a little bit more, noisier. I wouldn't disagree with the short term being bearish. My question is, where's I always question this a lot because it is right now my biggest position, right behind Meta. My biggest question is allocation and where do I add more? Where can I get in? I like to keep things weighted. But as far as I don't want to say I guess I am. There's the trader conversation that I'll have, where, because I'm actually swinging this over the weekend. I am bullish. That's from Friday to Monday, maybe Tuesday, right? This is a different time frame. We're on the weekly right here. It looks like it's bearish. And I don't know how else to spell it out. Lower lows, lower highs. I did that backwards with the mouse, but there's the channel down. This peak level right here is kind of where I'm loading the boat. Or I'm significantly buying more. I think that's the level of attraction. I don't want to say definitely. I don't like using definitely and supposed to, and I hate words like that. Here's the Rona crash, though. If you think, because there's a lot of tickers out there, and there's some, I kind of believe this too. I think with the free money that came out and everybody just pumping it into the market, and now they're just taking a vacuum and sucking that money back out. If we're going to close this chapter and get it right back to this, man, that puts Tesla at $60. That would suck. So if you've ever thought that about any other ticker, well, why does Tesla stand out? If you can create an argument for that, that's probably into your valuation metric and probably, hopefully, the reason you're buying. If you can't argue that, then, well, it sounds like you got a little bit more research to do. So overall, I didn't think it was a crap video. I think there's some pushback, some feedback. Let me know what you guys think. Not him versus me, but what he said versus what I'm saying, and I know this is Tesla, so it's gonna be polarizing. No way Tesla goes that low, and some of you guys are gonna be no way it even stays that high. I get it, but try to put some thesis or something into that. The auto industry, I think, is gonna get wrecked. Do you think Tesla has the benefit of being new enough to avoid that, or does it come down in the wreckage? Either way, I'm definitely interested to hear you guys' opinion. I didn't think that was a bad video at all. If I was talking about just cars, I don't know if there's any points if I'm talking about just cars, I think the pushback I'd have is the first one, right? Because again, it was demand crush. Number 2 was China. Number 3 was valuation. 4 was charts, right? So we can check those boxes off. Charts have Elon built into them though, so currently in a trend down. Can't really argue that. Valuation, yeah, that's pretty high for a car. China, I do think they'll favor their own, but I also think Tesla's kind of the juggernaut. So we'll see. Time will tell, and ultimately your P&L will reflect how right you were, how much allocation you put in there. There's ways to trade all of this. There's ways to trade this ticker and be wildly right and wrong at the same time. That's going to boil down to your allocation and risk management. And then your time frame. Could you stomach the storm, or did you put too much in and had to bail? But yeah, my pushback would be number 1. I think just the rich by Tesla. I think the pullback in demand was because the wait time just got ridiculous, and I do think that I don't think it correlated. I think it just lined up. Anyway, let me know what you think down below. All the cool YouTuber stuff, subscribe, all that. Links are always in the description. Shout out to Charlie and your success, by the way. Everyone else, I'll see you guys in the next video.